So right here on the Bitcoin chart, this is the trade. Watch what happens. Price broke out above the range high, closed back inside, and that's the entry. Short. Stop loss sits right at the breakout high. Take profit is 2 times whatever that stop loss size is. And just like that, target hit, 2R done. That's the whole system in a nutshell. But let me actually walk you through it properly so you can do this yourself. Here's what you need to do first. Every single trading day before you do anything, you need to mark 2 lines on your chart. The high and the low of the first 4-hour candle of the day. That's it. That's your range. To do this on TradingView, switch to the 4-hour time frame, go to your time zone settings in the bottom right corner and set it to New York time. Then find the first 4-hour candle that opened today. Draw a line at the high, draw a line at the low, and extend both lines to the end of the day. One thing, make sure that the candle has fully closed before you mark it. If it's still forming, just wait. You don't want to be drawing lines off an incomplete candle. Now, here's why this range matters. That first 4-hour candle captures the early market sentiment for that day. It shows you where the initial buyers and sellers were fighting. When price breaks out of that range and then pulls back in, it tells you that the breakout didn't hold, and that's your signal that price is likely to reverse back the other way. Now let's get into the actual setups. Once you've got your range marked, you drop down to the 5-minute chart. You're watching for 2 things in sequence. 1. A 5-minute candle closes outside the range, either above the high or below the low, not just a wick poking through. The full candle body needs to close outside. 2. Price then comes back and closes inside the range. When both of those things happen, that's your entry. If it broke above and came back in, you're going short. If it broke below and came back in, you're going long. Stop loss goes at the extreme of that breakout. Take profit is 2R. That's the whole checklist. 3 steps. Let's go through some real life examples, starting with crypto. Right here on Bitcoin, range marked. You can see price pushed below the range low and the candle closed outside. So we're watching. Then the next candle closes back inside. That's the setup complete. We go long. Stop loss at the low of that breakout. Take profit at 2 times the risk. Price then moves up and hits the target. 2R. Now on that same day, price stays inside the range for a while before eventually pushing outside again. But this time it doesn't close back inside before the day ends. So we don't take that trade. No re-entry, no setup. That discipline is important. Not every breakout gives you a trade. Moving to the next day. New range, fresh levels. Price breaks above the range high and closes outside. Then comes right back in and closes inside. Short setup. Stop at the high, 2R target. Price drops and hits it. Another clean 2R. Same day. Price drops and breaks below the range low. Re-enters. Long entry. Stop at the low, 2R target, hits it. That's 3 winning trades in 2 days on Bitcoin. And we're only using the most basic version of this strategy. No indicators, no trend filters, nothing extra. Now, and this is important, not every trade is going to win. On another day, price breaks below the range, re-enters, we go long. Stop at the lows, 2R target. Price barely moves and comes back down and hits the stop. 1R loss. Then on the same day, another long setup appears. Same result. It's the stop, another 1R loss. 2 losses in a row. That happens. But here's the thing. Because we're targeting 2R on every single winner, you only need to win slightly more than you lose to come out profitable. In this crypto sample, out of 7 trades, 5 were wins and 2 were losses. Total result, 8 are in profit. That's a 72% win rate just running this basic setup. Now let's look at Forex. Same exact process. For our range marked using New York time, drop to the 5-minute chart and wait for the setup. Here on Euro Dollar, price closes above the range high and closes back inside. Short. Stop at the highs, 2R target. This one hits the stop, 1R loss. But then, almost immediately after, price re-enters again. Another short setup. Same stop placement, same target. This time it works. 2R profit. This is something worth understanding. Just because one setup fails doesn't mean the next one will. The range levels are still valid for the whole day. As long as the price is giving you that sequence of events, break, re-entry, you can keep taking setups. And that's exactly what happens here. Price gives a 3rd short setup on the same day. Stop at the highs, 2R target, hits it. Then a 4th one, same result, 2R. 4 setups in 1 day on Forex. 1 loss, 3 wins. That's 6R profit in a single session. Next day, price gives a long setup quickly after the open. Stop at the lows, 2R target, hits it. Then another long setup later in the day. Same setup, same result, 2R again. Out of 6 total Forex trades in this sample, 5 5 were winners and 1 was a loss. 9 are total, 83% win rate. Now let's look at gold. Gold can move fast and sometimes the breakouts are bigger than usual. That changes one thing about how you manage the stop loss. Here on the gold chart, price broke pretty aggressively below the range low. Technically, it's a valid long setup when it re-enters. But if you place your stop loss at the exact low of that breakout, your stop loss is going to be huge. And that means your position size has to be tiny to keep the risk the same. In situations like that, instead of using the exact low, you look for the nearest key level below the entry and you use that as your stop loss instead. So here we found a nearby support level below the entry, placed our stop loss right there, set the 2-hour target and price hit it, 2-hour winner. Shortly after, price breaks above the range high and closes back inside, short. It's the stop this time, 1-hour loss. Then price trades above the range for a while before closing back inside, short setup again. This one has a large breakout too. So we use the nearest resistance at the stop. 2-hour target, price comes down and hits it. New day, new range, long setup forms, stop at the lows, 2-hour target, hits it. Then a short setup, it's the take profit. Another short setup forms shortly after, same result, 2-hour. Then later another short, stop at the highs. This one hits the stop for a 1-hour loss. Following day, price gives back-to-back short setups. Both hit the stop, 2 losses in a row, 1 hour each. Then another short, and this time, price finally hits the target, 2-hour. Out of 10 gold trades, 6 wins, 4 losses, 8-hour total, 60% win rate. Now that looks like the lowest performer of the 3, but think about it. 60% win rate with a 2-to-1 risk to reward ratio makes you money consistently over time. The reason this strategy works isn't complicated. When price breaks out of the range and immediately snaps back, it means the breakout was fake. Traders who chased that move are now trapped on the wrong side. As they exit their positions, it pushes price back toward the other end of the range, which is exactly where your take profit will be. You're not predicting the market, you're just recognizing a failed move and fading it. That's a real edge. And because the rules are completely objective, there's no guessing. It either broke out and closed back inside, or it didn't. That's a yes or no question every time. A few simple things to keep in mind when you're running this is only trade within the same day as the range you marked. Once the day resets, you mark new levels and start fresh. Don't carry setups from yesterday into today. If there are no setups, there are no setups. Some days price just stays outside the range for the whole session. That's fine. Forcing trades is how you blow up a small account. And when the breakout is unusually large, adjust the stop loss to the nearest key level instead of the exact extreme. You still want the same 2-hour target, you just size the position to the actual stop distance. If you want to take this further, watch this video right here.